$1,735. That's the trading result from our commodity and futures trading according to COT Data in week number 36. Welcome to Insider Week. In this video, we are going to show to you the trades of this week and the corresponding results. First of all, let's have a look at the portfolio at the beginning of the week. At the beginning of the week, we had 3 open positions in our portfolio, namely 2 long contracts in natural gas, 2 long contracts in gasoline, and our short 4 contracts in the 30-year T-bonds. At the end of this week, we are left with 2 open positions. Still, we have the 30-year T-bonds, 4 short contracts in our portfolio. We added 7 long contracts in a New Zealand dollar, and we closed the positions in natural gas and gasoline during the week. Let's have a look at the markets individually. First market, the 30-year T-bonds. On the weekly chart, we derive our buy and sell signals from analyzing COT data, seasonal trend, sentiment, and other indicators as well. As you can see, on the weekly chart, we received a sell signal. On the daily chart, we are looking for the right timing. In this case, the entry doesn't show our entry according to the entry pattern, but the previous contract expired and we had to roll it. In this market, we wait for our target price to be reached. Next market, natural gas. This is a trade that we have on our list for a while, so we directly go to the daily chart. As you can see on the daily chart, we were stopped out. We expected a deeper correction and we wanted to protect our accounting profits, so we were stopped out and realized a total gain of $1,620, and unfortunately afterwards there was an impulse wave. However, in a moment I will show to you a case where this technique actually helped us to avoid a severe loss. Next trade, gasoline. As you can see, we received a buy signal in the weekly trend direction, however against the seasonal trend. On the daily chart, you can see that we were stopped out here. We adjusted our stop loss to protect our accounting profit and to just save getting stopped out with a high loss. At this point was our initial stop loss, and as you can see, we saved a lot of money here. We can see that our technique of adjusting our stop loss worked out in this case. It's necessary to observe whether techniques have a positive expectancy over a large number of trades. And as we had the experience and we tested it multiple times in the past, such that we are confident when applying our trading rules. If we see that we actually missed an impulse wave, for example by using this technique in the other market, we know that it's not about a single trade, but about the long-term expectancy. On the long run, this technique is beneficial to us and actually saves us money. That, however, doesn't mean that you shouldn't reflect. In fact, you should reflect and you should always review and try to improve your strategy. For this technique, we have a positive expectancy, and so we know our technique pays off in the long run. Next trade, New Zealand dollar. As you can see, we received a buy signal a couple of weeks ago. In this market, we waited for the right timing, and as you can see, we saw a strong uptrend in the past, and now we use this correction to enter the market. Currently, we are long 7 contracts and we wait for our target price to be reached. Now let's have a couple of words on our second strategy, the so-called champion strategy. At the beginning of the week, we were long with 6 contracts in Canadian dollar. During the week, we closed this position, and at the end of the week, we have 0 positions left in our portfolio. By closing the position in Canadian dollar, we made a little profit of $90. Let's have a quick look at the trade itself. From the chart, you can see that we were stopped out, and this is because we adjusted our stop loss before the actual impulse wave to the downside happened. In this case, again, our techniques worked well and we saved us from losing money. If you want to have a look at the COT data for your own trading, you can go on our website, click on COT data, and then you will find a tool where you can actually see all the COT data for many futures markets. When you click on a certain futures market, you can actually see the weekly chart, which contains information about open interest, the price, COT data, and much more information. And you can adjust the time window just as you like and go back and forth. As we also combine COT data with seasonal trend analysis, we offer to you a seasonality tool which is very valuable on our website for free. Just click on seasonality and then you can click on the market that you want to analyze. The tool will show to you the seasonal trend for 5, 10 and 15 years. To see the profit distribution according to trading days, you can also select the month that you're interested. Let's select September, and then you can see the gains per trading days. If you're interested in our coaching program, or if you want to test our trading group, you can visit our website, fill in your details, such that we can give you more information. That's it from our side this week. Which trading tools are you using for your weekly trading analysis? Write it in the comments, and if you're already there, please give us a like and subscribe this channel so you won't miss our next videos. Thank you very much for your attention, and we wish you all many successful trades for the next trading week. And as always, be aware of the risk, because risk management is the key to success in trading.